The final auction for July 2026. Remember, we have had 3 treasury bond auctions in July 2026. The results are out, especially for 25-year bond and the 15-year bond. But let's go right away into the analysis. The 25-year bond, it has come out at a cutoff yield of 16%. Remember, the 25-year bond has a coupon rate of 16%. It has come out at a cutoff yield of 16%, where investors who are going for the 25-year bond are going to pay close to 7.6% premium, or you can round it up to 8% premium. And that begs a question, especially for the 25-year bond. Why are we paying so much premium for this bond, even when it has a very good year cutoff yield of 16%? In this day and age, in July, in August, 16% is a very good cutoff yield. The answer is simple. The 25-year bond is about to pay a coupon. It pays a coupon in next week, Thursday, on August 6th. So that means it has over 175 days of accrued interest. Remember, when you buy that bond right now, they sell it to you with all its accrued interest as if you had it from when it last paid a coupon, which is February 5th. So since then, we are buying that, and we are buying into that. So whatever premium that you are paying, you have a chance to recover majority of it. Because from a cash cutoff, and let me also explain this because it's a point where many times we miss. The coupon rate is equal to the cutoff rate, but the premium you're going to get is 7.6%. 7.6%. Yet next 2 weeks, you're going to just earn a premium of just 7.2%. So that means there is an element of where you're paying just withholding tax because of on the accrued interest that you're not going to recover at all. So that is the element that is driving that. But what I'm seeing, the government and Bank of Uganda received the tenders of 1.2 trillion and it only accepted the 360 billion, which shows that they are still in that mood of pushing interest rates to continue coming down. The 25-year bond is a little bit of a shocker for one reason. The 20-year bond that was auctioned off on July 15th, it came out at a cutoff yield of 15.95%. You would have expected the 25-year bond to have a little bit of a better year cutoff yield. But no, it came out at actually 16%, which is almost 15.95%, which means where we are going, that's going to be your expectation that Bank of Uganda and the team at Ministry of Finance are going to continue driving interest rates down. And that's why you are seeing now most of the bonds are in a premium position. The 15-year bond was another bond that many people went for. It has a coupon rate of 15.8%. It came out at a cutoff yield of 15.65%. The coupon rate is 15.8. The cutoff yield is 15.65%, which is lower than the coupon rate. And it came out at around 1.7% premium or 2% premium. The difference between the 15-year bond and the 25-year bond, the 25-year bond pays next week. The 15-year bond pays in Jan. So that's why you are seeing the premium people are getting on the 15-year bond is lower than the premium they are paying on the 25-year bond. But at least you can see when the 15-year bond was last auctioned off, that was on July 2nd, it came out at a premium of at a cutoff yield of 15.75%. Now the cutoff yield has come down. It's at 15.65%. That is 10 basis points lower. The last time the 25-year bond was auctioned off, that was in March. It came out at 16.29%. It has come out at 16%. That's almost 29 basis points lower. The 5-year bond. This 5-year bond is attractive for so many people because it has a 10% withholding tax, and it has a 15% coupon rate. It pays in May and in November. I always advise people who only want to go for this kind of bond to rather go for the 10-year bond. And the results show. It pays in May and in November. It came out at a cutoff yield of 14.25%. Yes, 14.25%. Which is indicative to say that now between the 3 to 5 year bonds the 3-year bonds and the 5-year bonds are within the range of 13%, 14%, 14.5% yield to maturity rate. That's not too bad. The 2-year bond, it came out at 12.5% as expected. The other bigger shocker is in the 15-year bond. The government wanted 450 billion. They got tenders of 520 billion. They only accepted 111 billion. So there has been a significant rejection. My bigger worry is in the 25-year bond, because if they wanted if they tendered 2 trillion in tenders and they only accepted the 360 billion, that means over 700 billion, actually over 800 billion is out there. It has been rejected. Actually close to 900 billion has been rejected. That money is coming back on the next auction, which is going to take place around August 12th, which will be for the 20-year bond, the 10-year bond, and the 3-year bond. One important element here that we are going to, the important theme here is interest rates are coming down. Interest rates are coming down. The fact that even the 25-year bond could not breach the 16.1%, the fact that it could not even reach 16.2%, it's a signal to get ready for August and September. Of course, right now there is certain dynamics that are at play. July had so many treasury bond auctions. The government recently released their first batch of payments to the different ministries and everything. But at the end of the day, interest rates are truly coming down.